The goal with charting is to separate the signal from the noise. Hello, everyone, and welcome to the Money Flow Weekly Market Newsletter with your host, Dr. BJ Love. I will be bringing you this week's update for the closing bell on March 7th, 2026. Now, the weekly market recap, we find that the oil surge sends markets lower. Rising geopolitical tensions involving Iran pushed global markets lower this week as energy prices spiked and volatility surged. Investors rotated toward commodities and defensive sectors, while most struggled under the pressure of rising oil and economic certainty. Now, for the week, the market scoreboard, the Dow Jones Industrial Average closed at 47,502. The S&P 500 closed at 6,740. The Nasdaq closed at 22,388. The Russell 3000 closed at 3,103. Now, the VIX notably closed at 28.03. Now, as we reiterate on the broadcast here every week, that if that VIX rises above that threshold of 20, we teach, preach, and re-advocate that on every broadcast. The market will tend to go down. And as we can see, that theory has been proven over and over and over again. As long as that VIX was below 20, the market climbed up, up, up. Now that that VIX is above 20, you've seen the volatility that it gives, the reading that it gives us, it lets us know that the market is coming down. We've seen that in the past couple of weeks. So that VIX is a very, very important number to remember. If it stays elevated above that threshold of 20, look for markets to continue to fall. Now, in the commodities and crypto section, we see crude oil at $90.42 a barrel. Now, as I have been checking the oil prices tonight, this is Sunday night when this program is being broadcast, China is 12 hours ahead of us. So this is around 10:30 p.m. here in the U.S. on the East Coast. But in China, it is the next day. It is 10:30 a.m. And I see that oil has really, really ramped up, jumped up about $25 per barrel. Wow. And it's above 116 as we speak right now. So where else can you get free information on the internet that gives you this kind of insight as to what is going on in the world markets? Moving on now, gold is 5,000, closed at $5,158.70. Silver is closed at $84.31. Now, as I see going on into the world markets, because these commodities, they really, really basically trade 24/7. So silver is down to about 82 right now. And I'll give you the update on what the current price of gold. But as you wake up in the morning, on Monday morning, you're going to see those numbers reflected as the market opens at 9:30 a.m. Eastern Daylight Time. Again, Bitcoin down to 63,840. Really, really in a what would you call it? A severe downturn right now. We don't see any turnaround coming from Bitcoin as of this time. So we just wait, watch, and see. Now, the gold futures, as I forestated, is settled around $5,158.70 per ounce, while Silver finished at around $84.31, both experiencing volatility tied to the geopolitical risk and the shift expectations around interest rate. So gold and silver, those precious metals are undergoing a correction. Now the long-term trend is intact, but we're seeing a short-term pullback in silver. So we're going to wait, watch, and see. And we have some silver and gold stocks that we like that we can show you how to invest in um, cheaply, and they have a potential to double, triple, even quadruple when silver returns to its uptrend, the short-term uptrend. Long-term trend is intact. Remember, always long-term trends dominate. So the dominant uh, trend of silver and gold is up, but the short-term trend is down. So we're going to have to let those play out. And as we say here at the Money Flow uh, newsletter, when your weekly term and your daily term are moving in the same direction, you have a powerful signal for continued increase. Okay, moving on down, and then we're going to spotlight the strongest sectors at this time, and we're going to spotlight energy sector with crude oil breaking above 90, now above 100 for the first time since 2023. The energy sector emerged as the market's strongest group. Now, two companies that we feature from the surge in global energy demand is one is called ET, that's Energy Transfer, is a major pipeline mainstream operator benefiting from rising crude flows and strong energy infrastructure demand. And our second choice is Frontline, FRO, one of the world's largest crude tanker companies, positioned to profit from higher global shipping rates and oil flows shifts during this geopolitical disruption. Now, if oil continues higher, which we have seen overnight, it closed on Friday at $90, and right now it is trading at $116. This pipeline infrastructure and tanker fleet may remain leadership plays within the trades. And we're going to look at those on the chart as we move further in the program. Now, the defensive rotation in utilities volatility also drove investors toward defensive sectors, particularly the utilities. Now, one name that we are invested in that has strong uh, possibility is PG&E Corporation. The symbol is PCG. Now, the California utility continues to see institutional accumulation and investors seek stable cash flow during these turbulent market conditions. And we're going to also look at PCG on the chart to see where it stands on a weekly and a daily basis. Utilities often outperform when markets enter risk-off phase. That means investors do not want to take as much risk with those high growth names like the Magnificent Seven. Now, making this sector worth watching if volatility remains elevated. So it is elevated. We are, in that 28 to 30 uh, range in the VIX, or what they call the fear gauge. So we are watching and seeing what the utility sector will continue to profit. Now, going into the mines and metals, um, as you have noticed, or probably have noticed, the mines and metal is taking a breather right now. It has silver has moved down from 120 down to 84 right now, and it's as we speak. The live reading for silver is around 82 right now, and I believe that 82 to 75 is a floor for silver. We're going to look at it in the charts, and we are going to pinpoint our entry point as it recovers from this correction. Now, the metals and mining continues to benefit from strong demand for precious metals, industrial metals, and critical minerals tied to the electrification and defense supply chain. And the ones that we're looking at now, uh, as they go through their correction and then they come out of that correction, and we have our very good entry point would be new gold, ticker symbol, EGD, and Silvercorp Metals, ticker symbol. Oh, I forgot my parentheses here. Y'all forgive me. Um, Bam, we got it. Okay, and it is ticker symbol SVM. And then our rare earth. Forget about the rare earth. Oh, I forgot this parenthesis right there as well. Look at here, because I'm doing this thing live for y'all, you know. So forgive any discrepancies that you, minor discrepancies. I don't want to publish this with any major discrepancies. So it is rare earth minerals, ticker symbol USAR. Now, for the sector outlook, the metals complex remains supported by several catalysts. So, even though there has been a pullback, the uh, catalyst or what drives the price of these uh, precious metals and the rare earth minerals prices up is that the metals complex remains supported by several structural catalysts. Now, gold is a safe haven demand amid geopolitical uncertainty, and silver, rising industrial use in solar and electronics, and then rare earth has strategic importance for defense and electric vehicle or EV supply chains. So we're going to wait, watch, and see. We're going to keep an eye on them, and then we're going to time our entry right when they start to break out again. Now, also with governments pushing to secure domestic mineral supply, companies tied to precious metals and critical metals are likely to remain in focus for investors for the rest of 2026. Now, here's the bottom line. Markets closed the week under pressure as geopolitical tensions and rising oil prices weighed on equities. However, energy and defensive utilities are beginning to emerge as relative strength leaders, suggesting where capital may flow. See, that's what we do here at the Money Flow newsletter. We follow the smart money, huh? And where the smart money goes, that's where we go. So I've learned that over the years, you learn to process this particular uh, trademark or this particular uh, indice or this particular uh, method, you tend to be 90% uh, ahead of all the other retail investors because you're following smart money. So the capital may flow if uncertainty persists. Now, volatility, remember, creates opportunity. So we're looking for the opportunities during this um, short-term pullback, as I would call it, because you'll see it in the charts when we go there. But only those who are prepared. Now we are prepared. I just gave you the sectors that are leading. I just gave you the stocks that are the leading stocks in those leading sectors, and we are still technically in a bull market. So we are prepared. So now remember that this newsletter and broadcast is prepared for client distribution, not investment advice. This is for educational purposes and informational purposes only. So now let's go ahead and move into these charts. Now, as you can see, as we start with our four grid uh, at the beginning of every program, after we read the introduction, you can see that we still on the S&P 500 and on the Dow Jones Industrial and on the NASDAQ Composite and on the Russell 2000. These are our major industries that we follow. They are all still on a green background. And if you've been with us for a while, this is our proprietary um, chart setup. and it gives us, if we are in a long-term bull, we have green background. If we're in a long-term